if there's a hallmark of any and every real estate mania, and you can ascribe whatever driver you want. Okay, so it was a global pandemic, but it manifested as bidding wars, right? And the bidding wars got crazy. They really, really did. So again, I'm not saying that the fact that it was a global pandemic and people were moving out of city centers and flocking to where I am in Austin or Boise, Idaho, whatever was the case, when you have bidding wars go wild, you cannot have some national entity called the National Association of Realtors come in and say, well, we had all these cash sales. It's just because people are just so wealthy. That doesn't work that way. Speculative manias always are backed by leverage of some kind. It's just taking us a little bit longer this time around to figure out where that leverage lies. But it's there. It's getting exposed. And we have now kind of two classes of sellers. We have the sellers who are in absolute denial. Their realtors are still lying to them. And we have sellers who are in a white hot panic mode because their financing is dried up. So they can no longer run the Ponzi schemes that allowed them to become overnight real estate moguls on TikTok.
Yeah. Well, it's interesting. You hit the nail on the head, because what I see is when you look at the agent that's presenting an offer to the seller, you can look back, or you can look at their offer first and see, that it's still in many cases crazy high where they don't need to be. Yeah. And, when you look back at their amount of transactions that they've done in the last year, you're lucky to find one. And so what's happening is a lot of these agents that have not produced, and they don't know that the tide is shifting, they're still from that mindset, oh, the house hits the market. If you want the house, you need to overpay for the house. And that's why we've been beating the drum that people really need to pump the brakes and make sure that they're hiring an agent that, tells them what's really happening on the street, because it's changed. But the question is, when you and I spoke before, we talked about a lot of these things. We spoke about how auto loans were in default, how mortgage forbearance is like we've never seen before. 4 years now of mortgage help and forbearance.
Forbearance didn't end on the FHA level until November of 2023. We're just now seeing. People are always like, "Where's the recession?" And I'm like, "How do you have a recession when you gave away, upwards of $1.5 trillion in PPP, most of which was fraudulent, employee retention credit, most of which was fraudulent, and EIDL loans, a lot of which was fraudulent? How do you have, and nobody's getting thrown out of their homes. So rental eviction moratorium, like people are like, where was that recession that you were calling from? And I really have to push back, because mathematically I was like, impossible for us to go into recession until they pull the plug. They pulled the plug last September. It looks like recession started last October.
So do you think all hell is going to break loose?
I think that the difference between, people keep asking me what's changed, Danielle. And the difference between 2023 and 2024 is 2023 were kind of these nice, polite, white collar layoffs and 6 to 9 months of severance. If you worked at Google and made $300,000, you were getting 60% of your salary for 9 months. And it wasn't really like some kind of a financial disaster in your life, right? 2024, it's like, hey, this chain of retail stores is liquidating. They're going to close all of them. You're going to get 60 to 90 days of severance if you're lucky, right? There have been furniture manufacturers, a lot of the companies that have been affected by all the demand that was pulled forward when people bought homes. There have been companies that have just, hey, it's Thursday, don't come to work on Friday, and we're not giving you your paycheck. And they're being sued, for not providing notice of firing people. But the difference between 2023 and 2024 is speed. And everything is happening right now really fast. We've had about 100,000 layoffs announced every single month in months that's not supposed to. January is supposed to be your big seasonal spike. We're going to fire everybody, clean house, and then we'll have a great rest of the year because we're going to, right size the business model. And then came February, March, April, May, June, July, and you're like, what is going on with these layoffs that are not stopping? And again, I think the difference is CEOs and CFOs across the spectrum. This is not just Silicon Valley got fat. This is United States of America in recession. Everybody's getting fired across all industries, and it's happening really fast. And until the shareholders are happy, the CEOs and the CFOs, they're not going to stop firing people. And that's exactly what we're seeing in the current earnings season. Hey, Salesforce just reported with more layoffs. Hey, Spotify just reported with more layoffs. And that's exactly what we're seeing. Until the shareholders are happy, that's the mantra for 2024. Until my shareholders are happy, until I've cut enough costs and fired enough people.
Yeah, a lot of people don't realize that. They think, we look at small businesses across America. I mean, true small businesses, mom and pop shops, and they will throw their own paycheck in a drawer before, not paying their employee. They'll go down with the ship. But these publicly traded companies or large corporations, I mean, they just come in and slash jobs, close locations. It's a lot of people, they think that they're working for a bigger company and they're in a safer position until shareholders aren't happy. The earnings reports are starting to show bad data where consumers are they're flat broke, they're pulling back, they're worse than broke, they're in debt. Where do you think we are, though, in well past the midway point here with the state of the economy?
Well, because we know, I mean, the reason I talk about the recession being dated to October of 2023 is that we know that the economy, after revisions on a net basis, shed 192,000 jobs in the third quarter. So that was of 2023. So we know that the job losses on a net basis, right? You have to account for hiring and firing. But on a net basis, we know that net job losses began in the third quarter of 2023. So let's just take as a given that October is when net job losses began. Bloomberg Economics, thankfully, agrees with me on that timeline. We're already, on an average basis, we should be coming out of recession. Average recession post-war era, 10 months. So we should be exiting this puppy. And yet we still have not seen Jay Powell make that first rate cut. So what does that mean about the complexion, the depth, the duration of the recession? Is it going to drag it out, Danielle? The answer would be yes. My views have changed slightly about when we're going to learn about the recession, which is important because that's stock jocks key off of Fed rate cuts. Until the Fed cuts rates, stocks go up. And then one day the Fed cuts rates, some stock jock in a trading pit somewhere says, why'd the Fed cut rates? Is something wrong with the economy? And it's the first time the question gets asked, typically speaking. And then all hell breaks loose. And so you don't usually see the stock market peak. Don't look for Nvidia to peak or the text, whatever, until the Fed actually begins to cut rates. So what does it mean if we wait until September? I had thought when the momentum was sufficient enough to say the president has Parkinson's disease, we're going to be replacing him with somebody who does not have Parkinson's disease. The minute the assassination attempt occurred, the Democratic Party said, we're not going to spend that political capital. We're going to let Biden go down with the ship and lose the election. We're going to let Trump win. So what does that mean for the political capital that Obama retains? He appointed everybody at the National Bureau of Economic Research, which since the Truman administration dates recessions. So now that you know you're going to lose the election willingly, because you're already saying, looking to midterm elections in 2026, looking to the presidential election of 2028. How do you spend your critical political capital? Because your working assumptions have changed. You're going to save Newsom, Whitmer, whoever it is. You're going to save them for 2028. Now, do you wait if you're Obama appointees at the National Bureau of Economic Research to declare that the recession has started until after Trump has won, to really stick it to the guy? Because we're all progressives, we're all liberals, we're all bureaucrats, we're all Team Obama. So let's make it as difficult a beginning of a presidency as we possibly can. and hold off on saying the recession started until Trump is in office so that we can attempt to blame him, even though any economist would be able to say that's not how this works. So we're in a different world right now. We're in a different world than we were before the event that transpired in Pennsylvania. And I think that that can create a lot of noise that you wouldn't have had otherwise between now and November. I think Obama would have let the National Bureau of Economic Research announce that the recession started concomitant with Biden being replaced. And, give reason to say, hey, this guy really needs to be replaced. The recession started on his watch. Here's yet another reason. If they're going to save that until after the election, you could have more calm in the data releases between now and the election than you would otherwise have, which is going to press Jay Powell to wait potentially until September or November, because the data is going to appear to be better than it is for just a few more months. Now, I realize you think that I'm a crack smoking conspiracy theorist for everything that I just said. I'm not. It's just political capital is political capital. And we live in a country that is run by several very powerful people. And when they decide the narrative is going to change, the narrative changes. And that's just that.